Hey guys, welcome back to the channel. I hope you have been staying safe and productive. Many of you have asked me about my real estate interests, so I've decided to make this video today to share with you guys my most profitable real estate deal. I know that a lot of you guys are just getting started on your investment journey, and I wanted to make my content as relatable as possible. And I think this deal can be relatable to a lot of you guys who are looking to purchase your first or second investment property. Before I start, I just want to let you guys know that this is not financial advice. This is simply my own opinion and what has worked for me. If you're looking to make purchases in real estate, you should always seek professional advice as well as do your own research. Now, let's get started on the video. In 2016, I sold my first investment property, an apartment in Docklands. I held this property for 2 years and only managed to break even in a market where most properties grew by more than 15%. I decided to learn a bit more about real estate before making any more purchases, and this ultimately led me to completely change my approach towards investing in real estate. One of the standout books I read on this topic was 0 to 130 Properties in 3.5 Years by Steve McKnight. If you haven't read this already, please read it. It is a great book and you can learn so much from it. This book, along with many other research articles, helped me completely change my approach and mindset towards real estate investing. And this led to a very spontaneous and profitable trip to Hobart. In late 2016, I decided to purchase a property that was cash flow positive, and Hobart came up as a market where these kind of deals could be found. Cash flow positive simply means the rental income is likely to cover all the expenses as well as repayments. After getting my finance approved, I became more interested in the Hobart property market, and I decided that the best way to learn more about this market was to visit it in person. So I booked a spontaneous 2-day trip to Hobart. On this spontaneous trip, I will go to more than 50 inspections and make offers on multiple properties. But eventually, the deal that I secured was via private treaty without a real estate agent. The platform I used was buymyplace.com. Even though these kind of deals are harder to find nowadays, it is still possible. And I would strongly recommend you to have a look at this website on your next property search. So I left Melbourne on a Friday morning and I came back on Sunday with an investment property. This was a crazy but super fun experience that taught me a very important lesson. It taught me the importance of taking action and stepping out of my comfort zone. Guys, this is the property I purchased. What do you think? Let me tell you a bit about this property. This property is located in a suburb called Moona, about 5 kilometers away from the center of Hobart, Tasmania. It is a simple weatherboard house built in the 1940s. It has had some work done to it over the years, but it is in great condition, and maintaining it over the years has been an absolute dream. So what's so special about this property and what makes it my favorite property in the entire portfolio? The first thing that I learned in real estate and what I'm about to share with you guys is to always let the numbers do the talking. Don't buy a property based on your emotions. If the numbers don't add up, then it is time to walk away from the deal. This property was not the best property in the street or the biggest, but it was the cheapest one in this condition. Out of all the properties that I inspected in the 2 days, this property came in at almost 10% lower than the rest. After negotiating with the seller and getting a further 10% discount, I organized the professional building inspection, and after everything checked out, I committed to the purchase. Let's have a quick look at the numbers. The property was purchased for $320K. And based on my research of similar properties in the area, I believed it could give me a rental return of $370 per week, giving us a rental yield of 6%. At the time of purchase, the interest rate was 4%, giving us a 2% surplus to service all the expenses associated with maintaining the property. And to sweeten the deal, I found out Hobart was a very hot rental market and the rents were constantly increasing. I've had the property for 3 years now and the rent has now gone up to $410 per week. After purchasing the property, the next step was to find a reliable real estate agent to manage the property for me, since I won't be able to do it from Melbourne. I set up meetings on my final day in Hobart and I was able to find an agent that has been amazing to deal with over the years. Expect to pay 7 to 8% in management fees, but you can claim all that back on tax. You know the feeling when things are going well and the stars just align for you? This is how I felt about this property. 2 weeks before I settled on the property, I instructed my real estate agent to start looking for tenants. And ultimately, we managed to find a tenant to move in on the same day as settlement, meaning I would not lose a single day of rent. The next step was to direct all bills from the council and utilities providers to a real estate agent. They will pay all of this from the rental income collected on your behalf. This simplifies the whole process and makes it a set and forget investment for me, requiring only a tiny bit of work from me during tax time once a year. Fast forward to today, this property has grown substantially. Let's have a look at the updated numbers for this property. Based on the estimates provided by CBA, this property is currently worth $473,000. To calculate our return on investment, we need to calculate exactly how much we put into this property. In Australia, if you put down a deposit less than 20%, the lender will make you pay a fee called the LMI, which is known as Lender's Mortgage Insurance. When I purchased the property, I put down exactly 20% to avoid the LMI, which equals to $64,000. Then I paid the stamp duty, the legal fees, the bank fees, and traveling costs, and that brings our total investment to $76,900. Based on the capital growth of $153,000, we have made a return on investment of 198%. And that doesn't even take into account the surplus rent we get every single month. And guys, this is why this property is my favorite investment property. Guys, we are almost at the end of the video, but I want to prove to you guys that this can still be done. So we are going to find a property that is cash flow positive right now. The current 1-year fixed rate for investment loan is 2.69%. Let's aim for the same 2% surplus we achieved in our previous example. Ideally, we prefer a house over a unit or a townhouse because historically, houses have better growth. Okay guys, so I've been doing a bit of research and the suburb that I came up with is West Launceston in Tasmania. There are a few reasons why I chose this suburb, but one of the main reasons why I like this suburb is, first of all, its location. So if you look right here, it's right next to a primary school, some shops here, and most importantly, it is right next to a hospital. So I think that will play a big role going forward in terms of capital growth. And another thing I want to talk to you guys about is the employment for this suburb. So if you look at the data collected from previous census, we can see that the unemployment rate for this suburb is only 6.8% compared to the state average of 7% and the Australian average of 6.9%, which is really good for Tasmania. And if we look at the occupation for people in this suburb, 31% of them are professionals. That is much higher than the 18% average in Tasmania and the 22% average in Australia. So that means that most of these people, they're like bankers, professionals, accountants. It's less likely for them to lose their job when times get tough. So I think this is a very important part about this statistic, and it's one of the deciding factors why I chose this suburb. So if we look at the recent sales for properties in this area, we can see that it ranges from about 350 to about 400 and sometimes even 500. If we look at the rentals for this suburb, it is renting out for about $375 per week for a 3-bedroom house, which is quite good. And we can buy a house here for about $400K. So if you look at the supply and demand in West Launceston, it shows that it is a very high demand market. It has 2,360 visits per property. If you compare that to the average of the properties in Victoria right now, I think most of them is about 700 to 800 per visit. So that is extremely high. That shows that there is a very high demand for properties in this area, and that the growth going forward is going to be quite good. So based on the rental income of $370 per week and the purchase price of $400K, we're getting about 4.8%, which is decent, but I think we can do a bit better. So let's look at what's for sale in this area. So if you look at what's for sale in this area, we can already see that a few properties going for well under the average price. So we found one here, a 2-bedroom for $320K. And then we got this one here with a 3-bedroom with a land size of 736. And this one is going for $349,000. And this one is probably my favorite one. It is a 3-bedroom, 1 bath, 1 car park with a land size of 607, selling for $329,000. So I think this one is very promising. Yep, so it's a very simple property. Looks like it's in fairly good condition. It probably can do with a little bit of work, but it's got good views, and the price is definitely very good. So if we put in the new prices for this one, so if we buy this property for $320K and we rent it out for $370 a week, that will give us a rental yield of 6%. So if we go to the next suburb over, which is Launceston, we can see that the price for this suburb goes up quite a bit. We'll be looking to pay about $500K for a 3-bedroom house, and that is quite a lot higher than the $395K we're expected to pay for one in West Launceston. So what this tells me is that there is definitely some room for growth, and we will probably see that going forward. Guys, I have just shared with you the strategy I use to find my most profitable investment property. I hope this gives you guys some inspiration and ideas for your next purchase. Because of the affordability of these second-tier markets, I believe it to have good potential for future growth. as well as a great way to get some income coming in straight away. Again, this is not financial advice. I've simply shared with you what has worked for me. And that brings us to the end of the video. Thank you for watching till the very end. I hope you guys enjoyed it. If you have any questions, please leave it in the comment section and I'll do my best to answer them. I'll see you guys next week.